Hello everyone, Pioneer. I greet you all from all over the world. What is the news about the PiNetwork project? Make sure you have clicked the like and subscribe button to Pi Explained, and also comment and share. Come in the comment and write PiNetwork to the moon. Oh wow. Pioneer 4 reasons. PiNetwork. Price crashed. After Mainnet launch. PiNetwork's Mainnet launch on February 20th, 2025 was a highly anticipated event for millions of users who had been mining the token via a mobile app for years. However, instead of the price soaring as many hoped, it plummeted dramatically. Reports indicate drops ranging from 50% to nearly 100% in some cases, within hours or days. As of today, February 23, 2025, the token is trading at a fraction of its debut price. Here are 4 key reasons why this crash occurred, based on current market analysis and sentiment. 1. Mass sell-off by early miners. Profit-taking pressure. One of the primary drivers of the crash was the flood of sell orders from early adopters, often referred to as pioneers, who had accumulated large quantities of Pi coins at no cost over the past 6 years. For many, the Mainnet launch was the first real opportunity to convert their mined tokens into fiat currency or other cryptocurrencies. Historical patterns with airdrop-based or tap-to-earn tokens, like Notcoin, Hamster Combat, and Wormhole, show that when users who acquired tokens for free can finally trade them, they often sell immediately to lock in profits or avoid potential losses. With Pi's total supply set at 100 billion tokens and 65% allocated to miners, the sheer volume of coins hitting the market overwhelmed demand, driving the price down from an initial $2 to $35 range to as low as 64 cents to $1.50 within hours. 2. Overhyped expectations. Met with limited utility. PiNetwork had built a massive following, over 50 million users at its peak, by promising an accessible alternative to Bitcoin's energy-intensive mining. Yet, when the Mainnet launched, the ecosystem's real-world utility didn't match the hype. While about 100 decentralized applications, dApps, were reportedly ready, few offered compelling use cases beyond peer-to-peer transactions. Unlike established networks like Ethereum, which benefit from robust dApps like Aavo or Uniswap, Pi's ecosystem appeared underdeveloped. Investors and users expecting immediate mainstream adoption or significant value appreciation were disappointed, leading to a loss of confidence and subsequent sell-off, further depressing the price. 3. Negative sentiment and fraud allegations. The launch coincided with high-profile criticism that amplified market skepticism. Notably, Ben Zhou, CEO of Bybit, publicly labeled PiNetwork a potential scam, citing a 2023 Chinese police warning that accused it of targeting vulnerable groups like the elderly and leaking personal data. Although PiNetwork's team refuted these claims, insisting on its legitimacy after 6 years of development, the damage was done. Posts on X and articles from sources like Brave New Coin and Crypto.news echoed concerns about liquidity issues, centralization, and similarities to multi-level marketing MLM schemes. This negative sentiment spooked investors, accelerating the price drop as trust eroded. 4th. Market dynamics and technical weakness. The broader cryptocurrency market context and Pi's own technical performance also played a role. The launch occurred during a period of general market fear, with the Crypto Fear and Greed Index reportedly in the fear zone. New tokens often struggle in bearish conditions, and Pi was no exception. Additionally, pre-launch IOU tokens had already fallen 55% to $30, signaling weak momentum. Post-launch, technical indicators, like breaking key support levels, e.g., $40 pre-launch, and an overbought relative strength index, RSI, reversing, suggested a bearish trend. Combined with listings on exchanges like OKX, Bitget, and MEXC, which enabled rapid trading but also rapid exits, the price couldn't sustain its initial rally, crashing as supply outstripped demand. Can PiNetwork recover and thrive? So, here we are. February 23, 2025, just 2 days after PiNetwork's long-awaited Mainnet launch. The champagne popped, the pioneers cheered, and then, crash. The price, which some ex-users pegged at a wild 314 intraday high, unverified hype, mind you, tanked to a sobering $64 to $150 range. If you're one of the 50 million plus users who mined Pi for years, you might be wondering, what now? Is this the end, or can Pi bounce back? Let's unpack the future outlook for PiNetwork, what's working in its favor, what's stacked against it, and where it might land in the coming months, years, or even decades. The short-term picture: stabilization or further fallout. Right now, Pi's in a rough spot. The mass sell-off we dissected earlier, 65 billion tokens flooding exchanges like OKX and MEXC, sent the price into a tailspin. But short-term chaos isn't the full story. Crypto markets love a good overreaction, and Pi's no exception. The first 30 days post-launch are critical. If the bleeding stops and the price finds a floor, say around $1 to $2, it could signal stabilization. Why? Because not every pioneer is selling. X posts from diehards like "I'm holding my 5,000 Pi for the long haul" suggest a chunk of the community still believes in the vision. The team's next moves matter big time. Pi's official X account trumpeted the launch with promises of external connectivity and a thriving ecosystem. If they roll out usable dApps, like a killer marketplace or payment system, within weeks, it could spark renewed interest. Imagine a scenario where you can buy coffee with Pi at a verified merchant by March 2025. That's the kind of utility that might stop the sell-off and lure buyers back. Analysts on web forecasts like CoinCodex peg a potential rebound to $4.10 by March 21st if sentiment flips bullish. A 192% jump from today's $1.40-ish average. But if the ecosystem stays thin and skepticism festers, we could see Pi dip below 50 cents. Testing the resolve of even the staunchest pioneers. 2025. A make-or-break year. Zooming out to the rest of 2025, Pi's fate hinges on three big factors: adoption, listings, and trust. Let's break it down. Adoption and utility. Pi's got 19 million KYC verified users and claims of 100 plus dApps. If those apps actually deliver, think seamless P2P payments or microtransactions for digital goods, usage could climb. Web predictions from Udrex suggest a $1 to $10 range by year-end if mid-tier exchanges list Pi and adoption ticks up. A viral moment, like a major retailer accepting Pi, could push it toward $50 per DeepSeek's bullish outlook. But if the ecosystem feels like a ghost town, expect a stagnant $1 to $5 range, as digital coin price warns. Exchange listings. Rumors swirl on X about Binance or Coinbase jumping in. No confirmation yet, but a Tier 1 listing could be a game changer. Look at XRP. Its Binance listing in 2017 sparked a 1,000% rally. If Pi lands on Binance by Q2 2025, paired with a Bitcoin bull run post-halving vibes, we might see $80 to $200, as Bitrus speculates. Without it, smaller exchanges like Bitget might cap growth at $24.85 to $55.60 per FlitPay's cautious take. Trust and sentiment. The fraud allegations from Bybit's Ben Zhou and China's 2023 warning still linger. Pi's team needs to counter this with transparency. Open blockchain stats, clear roadmaps, maybe an AMA on X. If they rebuild trust and hit 10 million active users, beyond just miners, ChatGPT's 240 ceiling for 2025 feels doable. Fail to silence the scam chatter, and CoinDCX's bearish $35.69 low could become reality. By December 2025, I'd wager Pi settles between $10 and $73, leaning on Crypto Time's $93.41 to $220.46 range, but tempered by current woes. A Binance listing and a killer app could defy gravity, pushing it past $100. But if the team stumbles, say delays in ecosystem growth or regulatory hiccups, it's $5 to $10, a slow bleed into obscurity. So, what's my take? I'm not here to tell you to buy, sell, or hold. I'm not your financial advisor, and honestly, I'd probably be terrible at it. But here's what I see. Pi's got a shot. If the team plays their cards right, rolls out killer features, rebuilds trust, and catches a lucky break in this wild crypto market, it could climb back to $10, $50, maybe even $200 in a few years. The bulls on X are dreaming of $500 by 2030, and who knows? Stranger things have happened. Dogecoin went from a joke to a billionaire's pet project. But there's a flip side. If the ecosystem flops, if the scam whispers turn into shouts, or if newer coins steal the spotlight, Pi might just fade to a buck or two, a nostalgic memory for the pioneers who believed. Look, whether you're a die-hard pioneer still mining away, or someone who just stumbled into this Pi party, I want to hear from you. Drop a comment. Did you sell at the top? Are you holding for the moon? Or do you think this whole thing's a bust? Smash that like button if you enjoyed this deep dive, and if you want more crypto crashes, comebacks, or crazy predictions, hit subscribe and ring that bell, because we're just getting started. I'll keep digging into Pi's next moves, and trust me, if it jumps to $100 or flops to pennies, you'll hear it here first. Thanks for sticking with me through this epic journey. It's been a wild one. Until next time, keep your eyes on the charts, your phone charged for mining, or not, and stay curious. This is Alex, signing off. See you in the next one.